Hello, everybody. Welcome to Monday. The S&P 500 was up a grand total of 0.01% today, so pretty much flat. It was kind of an accomplishment, actually. It was down for most of the day. A little bit surprising because the government shutdown was avoided. Should have saw some rally, saw the futures market up a bit, but by the time the market opened, it was starting to come back down. Kind of a focus really on a couple different things. The Federal Reserve governor, one of them came out today and said that she felt that they maybe needed a couple more rate hikes. The market right now is betting on no new rate hikes. So that was kind of a shock. She is historically known as what they call a fiscal hawk, just meaning that she generally likes to have rates higher for longer than even the average board governor there. But the market did react to that. And really, interesting for us, our signals changed today. On the fast signal for stock is now green. It went from red to green today. Still red on the long signal, still red on the two signals for bonds. And today the bond market had a pretty bad day today too. So it was good to be, kind of out of the bond market for the most part in our particular case, and sitting in T-bills and waiting for this to, get over with. So uh, looking at what's going on, kind of economically, again, I've been talking about this kind of support level that the market's going to probably come down to, this kind of 4,200, 4,100 range. And I think today's kind of a good example of what happened. So even though the news was good because we avoided this shutdown, the market continues down. I think because we've kind of have this downward momentum going, the supply and demand is really what drives the market, not so much the news aspects of it all the time. But one of the things that, I think we're seeing is just kind of this float downward to that level. I still think it needs to kind of get down closer to that level before we start to see some buying coming in. There's a lot of good things happening, as I talked about on the show on Friday. Inflation for the PCE index was only at 0.1% month over month, which is the lowest it's been since 2020, late 2020. But still, really, things are going in the right direction. Oil backed up a little bit today. There's things that should be happening to make the market go, but you got a Fed governor running around talking about raising rates a lot. That's been a problem for the market really since they started doing that in November of 21. So that's what's happening today. Not a lot, still kind of just waiting through this process. At least we're past the end of the quarter. We'll see what happens. Last year, we kind of had a high August 16th. This year, our high is the 31st of July. And then we had a low October 13th. And, we're kind of heading in that same direction. It's an interesting pattern. You usually don't see repeats too often, just because once the pattern is established, everybody kind of knows it. And so we'll see what happens. Maybe it doesn't happen, but nonetheless, we're tracing the same path so far this year, at least in this part of the year. So look forward to being able to talk to you tomorrow. Thank you.